In this FAR exam video, we're going to go through the AICPA blueprints step by step. We're going to go through each section that you need to know for the FAR exam. Sometimes the wording of the representative tasks is difficult to understand, so by us talking through it, you can better understand if you're ready for the exam. So after going through this, you can essentially use the blueprint as a checklist to see which topics you know and which topics you don't. So with that, let's jump in. Let's start by talking about a summary of the FAR exam. There are three main sections for the exam. There is financial reporting, which is 30 to 40%, select balance sheet accounts, 30 to 40%, and then select transactions, which is 25 to 35%. In terms of the skill allocation, remembering and understanding is simply regurgitating information, and there's a low amount of this level, 5 to 15%. Application is demonstrating your knowledge of a particular concept, which is a majority of it, 45 to 55%. And then analysis is looking at interconnected relationships to demonstrate your knowledge. This is 35 to 45% of the FAR exam. So first we have financial reporting, which is 30 to 40%. First we have general purpose financial reporting, which is for for-profit business entities. So first we need to know about the balance sheet for for-profit entities. We need to know what goes on each part of the balance sheet and what the classification is of the different types of accounts. Then we need to know about the income statement. We need to know a single step and a multi-step income statement. We need to distinguish between operating income, non-operating income, and discontinued operations. Next, we have the statement of comprehensive income, which includes your net income plus your other comprehensive income. Then we need to know about the statement of changes in equity. This is where you start with your beginning balance, you increase it from your earnings for the year, you decrease it from the dividends you pay out, you increase it from common stock that you issue, and it shows all the changes for the year. Next, we need to know about the statement of cash flows. Now we just need to know the indirect method of the statement of cash flows. So we need to know how to prepare a statement of cash flows and what the different categories are, which transactions go into investing versus financing, for example. And then we have consolidated financial statements. So we need to know when we consolidate financial statements, what do you need to eliminate by bringing the financial statements together? Lastly are the notes to the financial statements. So what are the proper notes that we need, the footnote disclosures, in the financial statements? Next, we have the financial statements for non-governmental, not-for-profit entities. So not-for-profit entities. So we need to know how to prepare a statement of financial position, which is just a balance sheet. It's just called a statement of financial position. Next, we need to know how to prepare the statement of activities, which is simply the income statement for a not-for-profit entity. This is going to include donor restrictions and what is released from donor restrictions. So we need to know these different journal entries that are unique to not-for-profit accounting. From there, we need the statement of cash flows for not-for-profit accounting, which is mostly the same as for-profit accounting. And then we need to know about the footnote disclosures for not-for-profit accounting. So then we have governmental accounting rules. We need to know about the different kinds of funds, like the governmental funds, the proprietary funds, and the fiduciary funds, which one to use the accrual method versus the modified accrual method. Next, we have public company reporting topics. So we need to know the purpose of these different forms that the SEC requires public companies to report. And we need to be able to calculate basic earnings per share and diluted earnings per share. Next is special purpose frameworks. So this is for anything that is not GAAP accounting. So if we're not using GAAP accrual accounting and we're using cash basis or modified cash basis or tax basis, we need to be able to name these financial statements and to be able to prepare them. And the last part of the financial reporting section is financial statement ratios and performance metrics. So we're analyzing a company's financial statements. So this involves looking at profitability ratios, liquidity ratios, solvency ratios, and performance metrics. We also look at variances between our budgeted results and our actual results. And now we move into area 2, which is on the balance sheet accounts. So it's the rules for all of our balance sheet accounts. We start with cash and cash equivalents. We need to know how to define cash and cash equivalents, and we need to be able to reconcile the cash balance to the bank statement by performing a bank reconciliation. Then we have trade receivables or accounts receivable. We need to know how to record journal entries for factoring AR, for example. We need to know how to write the bad debt expense for AR. Then we have inventory. We need to know the journal entries for recording the inventory. We also need to use the lower of cost and net realizable value, or the lower of cost or market, to potentially write down the value of the inventory. From there, we have property, plant, and equipment. So we need to calculate the amount of our fixed assets that we have and make the journal entries for them. This includes the journal entries for purchasing the fixed assets, depreciating the fixed assets, impairing the fixed assets, and selling the fixed assets. From there, we have investments. So we need to identify investments that are eligible to be reported at their fair value. Next, we need to look at when you're going to impair different investments. So we're looking at the different categories of investments and their accounting rules. Next, we have certain investments that are not updated to their fair value, but they are amortized based on the cost of them. And then we have equity method investments when we own 20 to 50% of investments. So we need to know the journal entries for equity method investments. From there, we have intangible assets. So we need to identify the criteria for recognizing intangible assets. We're going to have finite-lived intangible assets or indefinite-lived intangible assets. We need to know how to amortize and impair the intangible assets. Now we move to the liability section of the balance sheet and move to payables and accrued liabilities. So we need to know how to record accounts payable, dividends payable, accrued wages, all of the journal entries for any kind of payable. That's the most important thing within this section. And then we have the debt section. So within notes and bonds payable, we need to know how to record them. We need to know how to record a bond that has a discount or a premium, and how we amortize that discount or premium throughout the bond's life, and then what happens if we retire the bond before the end of the bond's life. And then we focus on debt covenants compliance, which are the requirements that banks put on us when we borrow from the banks. From there, we have the equity accounts. So we need to know the journal entries for all different types of equity accounts. When we issue stock, when we have stock dividends, stock splits, when we buy back treasury stock, and when we have capital account activity. Now that we're past the balance sheet accounts, we've made it to area 3 of the select transactions, which is 25 to 35% of your exam. First, we have accounting changes and error corrections. So when you have a change in accounting principle or an accounting error, how do you correct that? Do you go back in time or do you go forward in time and correct it? Next are contingencies and commitments. So if you have a lawsuit that you may potentially lose, how do you record the liability for this contingent liability? Next, we have revenue recognition. So you need to know the 5-step model for revenue recognition. You need to know about how revenue recognition works with pledges for not-for-profit entities. You also need to know about the amount and timing of revenue to be recognized, and the journal entries for revenue recognition. Then we have accounting for income taxes. So you need to know how to record the journal entries for deferred tax assets and liabilities and your current tax expense. Next is fair value measurements. You need to identify the best way to measure the fair value of an asset. This could involve using the cost approach, income approach, or market approach. And we need to use the fair value hierarchy to determine the classification of the fair value measurement. And then we have lessee accounting. So this is on accounting for leases from the lessee's perspective. So you won't have anything from the lessor's perspective. You need to record the journal entries for the lease liability, the right of use asset, and you need to know all of the journal entries throughout the life of these leases. Then we have subsequent events. So we need to know how to identify a subsequent event and know whether we need to make an adjustment to our year-end books or not based on whether the condition of it existed as of the end of the year.